So now let's start talking about why people would would basically hoard the U.S. dollar. Well, what would happen in the case of a hyper-credit deflationary effect, at least in our current economy and how it's designed, is that money has to be borrowed into existence. Now, that means that only $500 billion of real cash is being circulated at any point in time. Paper cash. And that's why I say paper cash should never be thrown in the trash can in a hyper-deflationary default, thus leading to a hyper-deflated economy, therefore a depression. The depression, Benjamin Franklin is king. And what I mean by Benjamin Franklin is the $100 bill. It will be like God, I guess. I mean, that sounds really jacked up. And quite frankly, money should never replace religion. But that's how people would treat a Benjamin Franklin. Because we have, on average, you know, we have a $16 billion GDP. We probably have $12 billion in circulation, maybe more. But only $12 trillion in circulation. But only 500 billion of it is paper money. Right? Only 500 billion. Keep that number in mind. Okay? So, economy collapses, people would trust their dollar bills. Okay? But any money that's inside of a bank would be thrown to the wayside. So, if you want to play the smart, be a little safe. Gold and silver is fine. But liquid cash is much better. Now, that also means that holding money in a savings account is kind of pointless, because not only does it never beat inflation, it was never designed to. You might as well hold on to those dollars and stow them away, because if in the case the government defaults, hyper-deflationary sets in, hyper-default takes place, then also that you get a hyper-depression, or depression that's much worse than the Great Depression, you would see the value of your dollar go up extreme, just by an extreme amount. And, that's why I say, interest should be done on higher yielding interest bonds, okay? And as your savings, perhaps putting it inside of a bank is a little safer in different aspects. Maybe it might get stolen, so-and-so. But in a hyper-deflationary environment, holding on to cash is king. Okay. Now, let's move on and talk about trades. Now, let's go ahead and review the Euro-US dollar. It is falling precipitously. And again, this is, see, it broke right below that 200-day moving average. This is where I'm going to put my bid in. In fact, I'm going to buy it right now. That's, quite frankly and simply, this is where I would buy the Euro-US dollar. Just give me a second. I need to go post that on Facebook. Alright, anyway, I'm back to the video. Again, you're starting to see a bit of a bid right here. Now, it's not by much, but again, if I were to buy a position, now, right now, this is when I'm doing it. So again, Euro-US dollar, buy opportunity right here. Right now, right here. This is when I would do it, period. No questions asked, right now. Okay, moving on. Volatility index, going up in value. I do agree with it. It is going up in value, but I want to stay on the bearish side, but not by buying the volatility index. I would much rather buy SPY put options than buy volatility index call options, because remember, when the volatility index falls, it falls much more than it ever goes up. So if I were to buy, if there's a way that I could be a bull in the stock market, I would buy put options in the volatility index. It has made me money so many times before. Okay, that's how I would make my money, at least. But if it comes down to just trying to play a decline in the stock market, I would never buy the volatility index. In fact, I would just go directly to the source and buy put options or put spreads in the SPY. Period. So that's how I would want to play the volatility index right now. As for the bond market, yes, I do see a significant incline for quite a time. But again, I just can't be too convinced. I see a sell-off regardless of whether the U.S. government or Congress agrees on raising the debt limit in time or not. I still see it pulling back. Therefore, I can't buy it. It's just not worth the risk. Now, would I look for a shorting opportunity? Yeah, up here at the double top. But until then, nope, not going to do it. Okay, moving on. Crude oil. Crude oil has broken right below the 200-day moving average. Now, this is very key. Because it's going to be a long time before we ever come back above the 200-day moving average. A long time. And if Congress can't come to an agreement, a very long time, guys. So again, I don't see much of an opportunity to be buying the crude oil market, but I'm very bearish. But I don't see an exact shorting signal quite yet. Moving on, I want to go ahead and talk about e-commerce China Ding Ding. Now, this is the type of company, and I like to accumulate over time. See, it has gone up by 40% from its lows. Too fast, too far, too soon. In my honest opinion, I see this stock declining a little longer. But I want to keep on averaging into this type of company because I have a strong belief that this stock will go up in value. It's positioned in the right economy. The economy is growing at a very, very fast rate, and the biggest consumers will soon be in China and no longer in the USA, sadly. So if I wanted to be an investor, where would I put my money? Well, I would put my money in the biggest e-commerce company in China right now, and that's e-commerce China Ding Ding. I believe in the future prospects of it, and I'm going to hold to it. And I'm going to hold myself to it, and I'm going to keep on accumulating shares in this type of company. So again, my belief is that e-commerce China Ding Ding is the way to go if you want Chinese growth and you want growth in the Orient. Okay, so, that does it for me for today. Euro, great opportunity to be buying right now. Great opportunity to be buying. I also have to say that China Ding Ding, I would much rather try and accumulate shares over time rather than trying to trade the stock for its short-term intraday moves. Okay? Bond market, I can't be a big bull on it. Crude oil, I perceive that it will continue to go down over the long term. And the US dollar index, I'm extremely bullish on it, and I do anticipate resistance at the 200-day moving average. Take care, folks. If you guys want access to my charting software, there's a free 2-week trial right below this video. If you want access to my videos, and you want to keep on watching them and you like them, go ahead and subscribe to my YouTube channel. It'll only take a second, and you might get some great stuff from now and then. So again, great stuff. It's free. You never know. You might get some great information over time. So, and I guess that does it for me today. I'll see you guys in the weeks and months ahead. So take care, and again, I'll see you all next time.